the corpus, right, and then apply it run it through the sentiment parser, and we might get back, for instance, positive and negative sentiment values that we then turn into then we weight those values by relevance, and we'll incorporate those into our models. Like maybe those models have imbalances as another factor, for example, right? And what we'll then do is, do data science and try to figure out, all right, how predictive is this thing? Is there a significant relationship here? Maybe we want to, reduce the risk of collinearity, so we apply, different types of statistical methods to try to figure out how to turn this insight into something that's stable. And once we have something predictive, then we just plug it into our infrastructure where we have execution algorithms, routes, or smart order routing, low latency, co-located infrastructure, and now we have a strategy that will start running in a matter of a week.
So brag a little bit. Give us some examples of some of the real successes that you guys have seen.
All right, well, so there's a demo that I'm doing in my breakout on Wednesday, and it applies some sentiment analytics from Alchemy, and it's plugged right into one of our imbalance models. And it's a stable predictive pattern. It's a $60,000 account, an 85-second trade, and it in the demo it makes a real cash, $1,062 on that $60,000 capital, which is a 1.77% return. And the reason is because on that particular day, there was sentiment weakness or uncertainty in U.S. in Europe, central bank policy, weakness in oil. Oil was down about 8% recently. But the interesting sentiment was the strongest weighted sentiment scores that we had were in gold, flight to safety to gold. And these happen to coincide with strong buy imbalances in gold, weak imbalances in energy and equities on that particular day, and we're able to book a really good return.
It's interesting how much, Dave and I talk about this all the time, and we geek out about some of the tools we built around data science, and look at the history of the web and the interactive world since the web started. It's really we're back to contextual and behavioral data. Right. You're essentially writing code and using Bluemix and saying, hey, here's the context. Trade banking policy in Central Europe. The behavioral is going to be the pattern you can predict,
right,
and the prescription is the trade.
Right.
You're saying, okay, you're doing that just faster and uniquely.
Well, the key is how much of a particular phenomenon can you explain, right? And like how that's really what we're after, right? If I could explain, and by the way, human behavior is almost impossible to explain. You can ask any psychologist, right? So it's like, but you don't need to explain all of human behavior in order to make to make decent returns.
You know that if the NFC team wins the playoffs, Super Bowl, the stock market goes up. How do you explain that?
Right. It's got to be.
The Giants are in New York, and
right,
that's an NFC team. People are happy. I mean, I don't know. I'm guessing, but it is a guess.
Well, I mean, it's like, sentiment could be affected by weather pattern. I mean, who knows, right? But it's all about looking for these deeper connections in the data. And, it's like the famous quotations, right? It's like 2.5 quintillion bytes of data created every day, 90% the last couple of years. Most of this data is unstructured, right? So, like, we're not even tapping into, we're just at the surface of really what all of this stuff means, right? And applying it in real time is really the future, I think.
This is not your first rodeo entrepreneurially. You've done a few ventures in the past.
Well, it is actually kind of all the same trajectory, but it's an evolution is what it is.
That same itch, as they say, entrepreneurial. So what are you doing differently? Let's talk about the entrepreneurial journey. It always is the case where you scratch that itch and just kind of stay on that same track. But now, as a startup, entrepreneurially, there's new tools available. So you're cloud native, you mentioned that. What are the things that you're doing now that weren't available from a funding company?
Well, what we're really doing is we're leveraging infrastructure that was built over the last decade, right? But that infrastructure itself is really just a delivery mechanism for our trading insights or algorithms. What's different now is that we have this focus on this, below the tip of the iceberg. Data, and it's like, wait a second, instead of just looking at how the prices of this asset relates to the prices of that asset, and trying to find a relationship, let's also add in the dimension of, something in unstructured data. Natural language, like one thing we're doing right now is, we're prototyping like tone analysis, so we can kind of, kind of parse sentiment from public company executive earnings calls, and see like how it's not just like the news they deliver, but how they deliver it, kind of thing, and see how that can affect our, market prices.
We're very pleased with the quarter.
Yeah, right. Crash, right.
How stupid are they?
Yeah, right. So things like that affect investor behavior, right? But they're not necessarily captured in the price.
It's
at least
nuanced.
not right away.
I mean,
Yeah,
you're
it's
basically
nuanced,
picking up nuanced signaling. I mean, essentially, it's taking signal theory.
The price will factor it in, but there's like a lag time, right? It takes time for that.
And that trade value is just a blocking and tackling. You chip away in volume.
Right.
If you're knocking down on $60K, $100,000.
Right. Well, it's more about. It's not so much about the absolute dollar amount or the return. Just the idea that this is a predictive pattern that works. It's about monetizing insight that we were able to extract using Watson alchemy, right?
Okay, so talk about this is always hotly contested since we're geeking out on it. We'll go there. Predictive versus prescriptive analytics. Obviously, a lot of people get confused by the two, predictive and prescriptive, and you're seeing it in ad tech, now you're seeing it in all verticals. And any mobile app pretty much has some data layer in it with some aspect of analytics.
Sure.
What's the difference between the two?
Well, I mean, if I understand you correctly, in terms of prescriptive analytics, suggestions, right? I look at data and I suggest. I was at Partner World last week and I heard, I think Steve Gold talk on stage about Fitbit, and the idea is that with Under Armour, I think they're trying to now, it's not just all right. Well, that you have 10,000 steps, but now what do you do about it, right? It tells you kind of what to do. So to that end, we're actually building out a recommendation engine that will actually allow portfolio managers to upload their returns and take from our universe of different strategies some kind of recommendation back saying, all right, well, if you incorporate X amount of this strategy and X amount of that strategy, this is how your portfolio could evolve over time. So we're kind of getting into that. From a predictive point of view, it's really just about finding those insights.
Prashant, really appreciate you coming on theCUBE. Share with the folks out there that are watching, what's the vibe of the show here? What's your take on the show for the folks that aren't here watching live?
It's a great show. I mean, it's a lot of fun to talk to you guys, and you take a real data-driven perspective on things.
Awesome. Well, we have a recommendation for you here in the recommendation engine in theCUBE. Check out our CubeCast on siliconangle.tv. A lot of insight in there and potential prescriptions. We'll figure out how to create that in the future. Prashant, great to have entrepreneur, data science, doing some cutting edge, creating value, not just arbitraging, but value. Congratulations, Alpha Modus, here on theCUBE. We'll be right back with more extraction of the data in real time right here on theCUBE Live. We'll be right back after this short break.